What's happening? What's happening, everybody? Nobody's here, but I'm gonna go on and drop this video, get on back with my day. Anybody shows up, we can chat about it. Uh, Otherwise, like I said, I got my trade in on this. I'm good. I'm good. All right. I got a chart up. Bitcoin. I'm gonna go ahead. Nobody's here, but I'm gonna go ahead and do it. And get off of here. Um, Let me get back to my chart. Okay. I'm trying this out on Brave. Testing this out. Brave browser. Haven't tried this again. Okay, I can toggle my chat. Okay. Or no, this is how you bring up the chat. Okay, that's how you do that. Okay. Working it out. Working it out. All right. So what we got going on here is this is a very, very easy chart read. Very simple, not much to say. This is a weekly chart of Bitcoin. I can move this. I don't need this. Very simple. In terms of Elliott wave theory, we call this an ABC structure. It hasn't fallen as far as it's projected to fall, but we see here, we call it, this would be the A wave, this up move would be the B wave, and this would be the C wave in progress, I maintain. And although we are still oversold on this weekly chart, when we go through the different time frames, I'll show you that it is overbought on lower time frames. It's just that the speed of this selling, the aggressiveness of this momentum, makes the oscillator, this particular stochastic oscillator, it's not, how can I say it? It's not sensitive enough to keep up with the aggressiveness of the move. Okay, so that's why you have to look at it on multiple time frames. So we had a very important low here after the A move. Then we had the B wave, and then we broke lower on this big candle, and we traded back up almost to the area of the low. We didn't quite make it. Almost. But if you draw a trend line on this downturn, we came right to the channel boundary, exactly to it. And any rookie level tech TA trader, especially if they are in a robust methodology like Elliott wave theory, we were expecting this. And so I am not against Bitcoin. First and foremost, I am a trader. So whatever is working, I trade it. I don't care. I don't trade the news at all. News is irrelevant. It totally is. I know that sounds crazy, but if you sign up on my Patreon and hang out with me, you will come to agree that it is totally irrelevant. Totally irrelevant. Okay. People are not sitting there watching the news and deciding on a day-by-day basis whether they're going to move hundreds of thousands and millions of dollars. It just doesn't work like that. Okay. People who have a position and they maintain, they trade around, let me say, a sentiment, a point of view. Okay. And they're if they have a lot of money, they have a more long range. And I didn't want to say that word long range because I'm not trying to trigger your mind into things like investing. I am a technical trader. I'm a purist. As I said, news doesn't matter. There really is no such thing as investing. That's just a word that losers use. Everything is a trade. It doesn't matter if you're trading it for 1 minute, 1 day, 1 week, 1 month, 1 year, 1 decade. It's still all a trade. Okay? So what we do is when it doesn't go our way, we call it an investment. But in the technical world, Again, technical analysis is an umbrella term. It's like doctor. Well, there are all kinds of doctors, you know. Some of them work in hospitals, or some of them are in the medical field, and others are not. And even within a hospital, you better get the right doctor. You know, if you go in there with a foot injury, you got to go get a doctor that specializes in that. So you have different disciplines within, that category of people we call doctors. Well, technical analysis is like that. So they're different camps, different little tribes within it, and they have their own rules, their own methodologies. But there are some basic things that's common to all of them. But the particular tribe camp I'm in is called Elliott wave theory, and that one is the most robust because it deals with large data samples, large trends, okay, and the minor trends within it. I'm thinking in terms of a 100-year chart, okay. There are minor trends within that major trends, and there's a systemic way that you can count that and make pretty accurate projections about what the price is going to do. And there are other signs of when the trend exhaustion, we call it, when the trend is basically running out of gas. And I'll say that type of stuff with like trend exhaustion, that type of skill is kind of common to all forms of technical analysis. It's just the Elliott wave theory is the primary one that has the most or the best predictive powers. They don't like to sell it as a predictive tool, but it can be used that way. You just have to know that it's not exact. It's like fuzzy logic, and when you still have to look at what the price is doing. As it's progressing towards that target, and the price will do things along the way to either strengthen your argument or negate your argument. And so that's how we approach it. And it's good if you're in a community of other people, because especially other people of that same discipline, then those other people know the rules, the tenets of that quote philosophy or a principle, in this case a theory, Elliott wave theory. And you can have rigorous debate. On my Patreon, I got a group. We meet every Sunday because it's not football season and they wanted it. But I told them when the football season comes, we ain't meeting on no Sunday. But every Sunday we get together and we have rigorous debate. It's open to all the Patreon folks. New folks drop it. We've got experienced folks and new folks, and we break it down for the new folks. And then also during the week, I have other training that it can be group based, and some of it is one-on-one. It's up to the members. My Patreon is very inexpensive. You wouldn't believe the price. Okay, this stuff costs thousands of dollars. Some people pay $10,000, $30,000. You can drop all them zeros. Mine is $10 a month. All right, you're right. I got people that have made 20, 30, 40,000. I got people that made 100,000. I got people that's sniffing at $1 million. Okay, all from this knowledge. So if you come in that door, you will not be a skeptic for long, and you won't leave, and you will your entire perspective of what's going on will change, because I will show you receipts. You'll start to learn this in short order. You can get a good basic understanding in a couple of months. It's a lot to take in. It's going to challenge some blue pill stuff that you've been fed. But after you see it, you're gonna go, wow. If you think you are red pill, if you thought you were red pill, you wait till you see this. This is where you really see how deep the rabbit hole goes. You get to see misinformation in real time, and you start to make these calls, and you go, wow, this is deep. Anyway, so that's really what's going on here. We got this C wave in progress. It's respecting this resistance right here. At the bottom, I got momentum oscillators. It's measuring. It's counting volume. It's counting trade order. I'm trying to make a distinction between orders and it's like if this was a stock, it's not counting like the individual shares. It's counting the orders. So if you put in an order for just one Bitcoin and Warren Buffett put in an order for 1,000,000 Bitcoin, that would still only be two ticks, So one person can't really distort it really. It requires I can't say that word, breadth, BREADTH. It requires a lot of orders. And so this momentum indicator is measuring the pace or rigorous or strength and weakness of the order flow. And generally price tends to follow momentum, but there are some exceptions when they diverge, and we look for that divergence because that divergence is a clue that the direction is about to change. So it's not just one thing that we use. So when you hear people say, well, I don't use no oscillators, because they don't know what they're doing. That's why. Once they get taught properly, they will know the value of it. They will trade it. We don't just buy or sell because the oscillator crossed. Although you will see many times that it does work, but we don't do that. We will look at it and go, and that cross could be a reason for us to go in and investigate further into the lower time frames, and then we'll see something else structurally that'll clarify and give us embolden us to make a decision. But anyway, so I just got two different types of momentum oscillators. I'm looking at the momentum. And so the momentum on this weekly chart, on this particular bottom one, is called a MACD. And so this center line, think of it as when the order flow is bullish, these two lines are above the center line. And when we're in a bearish environment, they're below the center line. The two lines are still below the center line. We're still bearish. Besides, this ABC structure hasn't completed because it's got more to go. You got another common, popular technical analysis. Another camp, as I said, these are different camps. Is price action. It works. All of the systems work. Every last one of them. Some of them are more difficult than others, but none of them are perfect. All of them work. None of them are perfect. And all of them are superior to fundamental analysis. Every last one of them. So when you hear fundamental analysis folks criticize technical analysis, be sure you make them prove that they can do better. Because the fundamental analysis folks had you lose all this money. And then they turn around and say technical analysis doesn't work because we can't predict the price right to the penny. But they don't tell you exactly, give you a good idea exactly how accurate we are, how close we are. If technical analysis can get you to within 2 or 3% of the price, of the top and the bottom, isn't that good enough? Isn't that good enough? To be conservative, the goal is really to get at least like 80% of this whole, if you're shorting it, 80% of any swing. That's what we're really trying to get. I think a good technician can do even better than that. But 80% is good. That's very good. And so when fundamental traders poo-poo technical analysis, just make sure you hold them to the same standard. That's what's never done. The fundamental folks get to criticize technical analysis, but they don't get to defend their putrid record, of only making on average 10 or 15% a year. Um, they never tell you when to get out. There is no clear rule about when the heck to get out of a trade. Technical analysis has all of the different various camps has some rules, some rules. Some rules are tighter, more stringent than others, but all of them have a rule about when to get out. All of them. And none of them will have you sitting through this. This will never, 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 unless the price falls from here to there in a day, then it might happen. But a fall that started in November and here we are in May, no, every form of technical analysis, 100% of them, 100% of the time, will absolutely make sure that this never happens to you. It will never happen to you. 100% of the camps within technical analysis will eradicate this experience from your life. Totally. But fundamental analysis will not, because you're taught to hodl and you're told nobody knows nothing. Technical analysis has been around for approaching 100 years, more than 100 years. It's one of the said to be fathers of it is Charles Dow, the Dow Jones Industrial Average. Okay, how is that prominent enough for you? And they're trying to make something seem like hocus pocus. I don't want to. Let me just leave it at that. Hocus pocus, and they're criticizing something that's been around for over 100 years. And they lie and tell you that nobody's really doing this, that big money people don't do this. A lot of them are doing it, and then a whole lot of them are lying about it. Straight up lying. Because I watch a lot of big name fundamental traders. They come on TV and they say, I think I'm going to lighten up some of my position on it. And they always say that crap right when the market technicians, that's what the technical traders are called, right exactly when the market technicians are saying, get out. That's when they come on there saying, I think I got a feeling. I think I just want to lighten up a little bit right here. Nothing in fundamental analysis tells them to lighten up a little bit right there. Fundamental analysis says if it falls, it's getting cheaper. You should buy more. And they come on TV right at these key technical points, telling you they just want to lighten up a little bit. And that goes over your head because you don't know technical analysis. When you learn technical analysis, you will laugh like hell. You will laugh like hell because you know that somewhere they either know technical analysis or they're getting fed information from market technicians who have proven to them that their word should not be ignored. And you'll notice on television, whenever there's a nasty decline, you will see it now with Bitcoin. This move in progress, if it continues, I think it will. I'm pretty sure it will. They always bring out the market technicians. The fundamental traders have no explanation. They work on this idea that price movement requires a catalyst. No, it doesn't. The catalyst is the trader made a lot of money on the swing and he doesn't want to give it back. That's the catalyst, period. There is no other catalyst. There's huge volume traded every day on all the markets, from the S&P to Bitcoin and everything in between. They are trading, moving money in and out of the market, moving $100,000, $1 million, trying to get 1%. 1% of 100,000 is $1,000. In the day trading world, that's what we're trying to get. You're trying to somehow get your hand on a large amount of money, whether that's using margin with the broker or going into the prop firm trading world where you trade other people's money, or you trade a firm's money, and typically you keep 80% of the profit. The house takes 20% of the profit. You looking to make 1%, $1,000. You walk away with 800. They keep 200. That's later. It takes a while to get to that. Okay, but that's doable. But that's what's moving the markets. It's people trading for a living. and they're just looking for opportunities because prices make these swings every day. They don't just move straight up, they move up, but they snake their way up. And those little mini moves that might last an hour or two, you could get your 1% in those moves. And that's a whole, that's, people, traders, that's like our whole life. Okay. So I'm a full-time trader. All right. Let me go down to a daily chart, and I'm gonna see who's rocking with me here. This is, so the line's a little off because I did it on a weekly. All right, but you see, okay, the deal with these oscillators is this is just a stochastic oscillator, and the white area above this little purple area means overbought. It means that in the past, when prices have gotten to this level, I'm sorry. Yes, it means in the past when the momentum, because this is a momentum oscillator. It means that in the past when the momentum, meaning the rate of buying, okay, when the rate of buying has gotten to this level on the daily chart, meaning every candle is 1 day on this chart. On the other chart, every candle was 1 week. And that when the momentum has gotten to this level in the past, for instance, here, the price responded with a decline. So momentum is at that point again, and it's likely to respond with a decline. And it also rolls up to what we call a level of resistance. Didn't quite get there, but let me show you what let me go down some more. So let's see. Let me mark this high right here. Because even if it does go higher, it's still, look at what's overhead. And it could. Let me see. But it's not like celebration. At some point, you need to get out. All right. Like I said, this wick here was the low from the past. And so the psychology goes that at some point in the past, this was the low. And then later on, we fell through right here. And so there were people here who owned it before it fell through. And the psychology is that they will sell once they get a chance, once the price comes back to the area of this low. They're going to be looking to sell. So anywhere in here, so even if it was to go a little higher and come back up to here and touch this, this is pennies. Okay. But I think it's gonna die now. But it could in theory come up to this. But let's go down to so we're overboard on the daily chart. Let's go down to the 4 hour. I don't trust this at all. Okay. Forgive that noise. It's just real nice. And I'm sitting out on the porch. I got a fan going. The only thing that's missing is some lemonade. I like to spike some lemonade. This would just be the perfect morning. Just finished eating breakfast, some salmon cakes. Oh man. So I'm just like chilling on the porch with the fan. All right. So this candle also went lower. So until we take out this one, this would be like the last hope. you know. The price really if you're cheering this thing on, you really need to stay here. There is a chance that it could, like I said, come up to here, but still you gotta be thinking get out. But I'm going with this, that this is it. I think this is it. You know. But on my we use what's called stop losses. So anyway, in trading, so we put order in to exit the trade if the price goes beyond a certain point. Okay, so that's how we do that. So that's that. So just like here, you had these lows here, then the price went lower, and it's trading back up to that area. You can see it better on the lower time frame. But I just want to point out that on the 4-hour chart, we're also overbought up in that area in the white, just like on the daily. So when you're overbought like that, especially on multiple time frames, it's not smart to bet that the price is going to keep going higher. So this is the point where you go, okay, let me stop being greedy. Let me just take my money and go sit down. All right. You know, so this is the 2 hours overbought. So so I don't know. I'm gonna go down to the 1 minute. I just or 5 minutes. I want to look at this. Let me try 15 minute. Maybe that'll do it. Yeah, so you're trading above these lows just a little bit. The wick means price rejection. The wick means the price came up here and the market sold off. People said, "I'll take my profit." That's what the wick means. So it was up here, and the price started coming down because again, that psychology I was telling you about. People owned it at these levels. These levels. And then this big candle came and scared the hell out of them. Okay, scared the hell out of them. And then it came back up, and then they said, "Let me get out," because this candle, the size of this candle, and it falling this far, making new lows. So the buy on the dip concept that bulls need. Bulls need the market to see value in the thing and buy on the dip. Well, it's not supposed to dip below the make a new low. It did. And so the smart money knows that. They say, okay, it came back up above these lows, and they're like, sell. And that's what that wick is. I mean, it could still, it's likely to come down a little more, go one more. I could see one more move up, one more zigzag up. Not to a new high. I'm talking about that, that, that. I'd be looking at this area, this area. It could, and then die again. But this is struggle love, okay? This is Bitcoin struggle love right here, okay? So it's just in a bad way. It's just in a bad way, and we got this momentum right here, this other oscillator. And they're like, look, I'm out of here. So this means that people aren't even buying it. It means that during this sideways move, the rate of buys, okay, diminished. So the hopium is gone. The hopium is gone. All right. This is fact. This is not opinion. That the hopium left. All right. Because if they were still loving on this thing real hard, the momentum would still be high. So, like I said earlier, price and price tends to follow volume. Okay, or momentum. Same thing. Same thing. Um, but momentum will tip you off. So basically, momentum typically changes direction before the price does. That's the short of it. It's like at the auction. You go to an auction, you see people putting up the paddles, out, and you see a whole bunch of people bidding. You say, "Can I get $300?" Okay, you got a lot of people. By the time that price get up to, "Can I get $1,000?" You got 2 or 3 people in an ego contest bidding the thing up higher and higher and higher. That's what happens in markets. When the price gets to irrational levels, you have a small number of people participating in driving the price up higher and higher and higher. But when that small number gives up faith, there's nobody around that's interested in the thing at that inflated price level. And when that happens, you get this, that big candle. And it was created by the disinterest, which is exemplified by this momentum decrease. Okay, the main if we talk in terms of 80-20 rule over here. This is the 80. You need the sheep. You need you know these big orders, large quantity, the breadth, not the great number of people pressing the buy button. Well, that slowed down, and that put this whole move in danger. And then you had this big red candle. So we'll see. I think we can maybe get another push up a little bit, and then really give up the gold. This thing is to be faded, to be sold at every opportunity. So these wicks are right. These wicks, they right on it. Come down to the 5 minute. Yeah, I can see it coming down a little bit, and then maybe shooting up one more, and then dying. This is just enough to get people excited, to cheer it on. The people that don't know technical analysis. You know, once you learn the rules of technical analysis, then your struggle is with yourself, because now you have to control your greed. Because you get so good, you start like sticking around trying to get the last penny. When, like I said in the beginning, if you can get 80% of the trend, you good. You need to go sit down. But no, we here getting the last penny, licking the bowl, and we get slapped, and but we don't lose all of it. We might lose this. We get caught with this messing around. Okay, so let me see who's rocking with me, and get on up out of here. Let me see who I got. What's happening, Sir Anthony? What's happening, Mike V? Bro, I ain't seen you around in a while. Mike V doing his thing, y'all. He's IT security extraordinaire, among other things. Renaissance man, Mike V. Fellow co-founder of the Black Brain Trust. We did good, Mike. We did good. We knew this day would come. Look at all these PhDs and professional brothers over here. We did a good thing. We fought the good fight. The revolution came to the manosphere. you know, you know what's happening, Sarah? I don't, Sarah. Do I have that? Are you new here? This is your first time over here, Sarah? Unreasonable man. What's happening? Okay, Ike. What's happening? What's happening? Iori, my brother from the Patreon Ori game, getting tighter and tighter every week. What's happening, Chris Mode? Um, anybody? What's happening, DJ Nath? What's happening, bro? Thank you for your support too. Definitely. You know, I think you were on the Patreon for a good while, wasn't you? 1 minute. What's happening, she? We hear she. You always everywhere. you know. We hear is all over these streets. So let me see. Let me do a quick poll. How many people here are hodlers? How many people are hodlers? Oh, well, come on back, DJ. Now, and when you come back, man, you gotta hit me up for those one-on-ones and send me the charts and that kind of thing, because that's where people really make the leaps. Because everybody sees these charts of their own. I don't want to say it that way. What I want to say. Everybody has unique strengths. That's what I want to say. And weaknesses. And when you are in dialogue with somebody else is trying to, like, teaching you, they can help you see what it is that you do, that your eye sees very well. You know how on those like IQ tests, they ask you, which one of these is not like the others, or which picture represents what's next in the sequence. So pattern recognition skill is that's like one of those higher intelligence things and skills or attributes. And trading definitely relies on pattern recognition. With that said, there's certain patterns that some people see better than others. And a part of what people are dealing with when they're learning technical analysis is they're learning themselves. Man, know thyself. We're back to that. So you're going to get in tune with what it is that you see just naturally without even a lot of work. You just naturally can see that. And then you have to build a trading plan around that thing that you do well. And so, and then you have to mind your business. Your trading plan, your approach is going to be unique to your skill. And so then, you don't get caught up with what other people are doing because they're trading according to their skill. And so that's why you have a lot of different people trade saying different things in the world of technical analysis. One, we got different uh, disciplines under that broad category of technical analysis, and then you have people that have unique talents, and their system is designed to exploit their strength as opposed to being punished for their weaknesses. All right. Jeff R. He's hollering. Okay, you staking Ethereum. Yeah, I tell you, I had I was trading USDC for most of this time that Bitcoin was falling, and I made a little money. I didn't lose nothing, you know. But what was weird about it was that Bitcoin and the US dollar was trading in the same direction for a good period. And I talked about it on my Patreon. That's aberrant, but it does happen. For everybody listening, the US dollar, think of it as like a seesaw. Well, first of all, when you're trading Bitcoin versus the US dollar. So you're trading a relationship. So the Bitcoin typically needs the US dollar to be weak. So we're in a strong dollar environment. Um, Typically, when the dollar is going up, gold, energy, and metals. So that would be gold and oil, energy, metals, um, and Bitcoin. Should be going down. Those things generally. There are periods, rare, but they happen. you know, where they trade in the same direction. And that's going on right now with the US dollar and oil. But that's not going to last. When that correction comes, it's going to be nasty. It's going to be violent. Gold too. Gold has uh, a correction ahead. That's not going to be pretty, you know. And so but the dollar has run pretty hard, and it's near a point where it needs to take a pause. So we'll see. Not the dollar uptrend is not over, but it should be ready for a pretty significant, say 50% retrace. It's had a pretty violent move up. Okay. And so when the dollar moves up, it stresses out the other currencies in the world. So I know everybody's gone crypto crazy, but the US dollar ain't going nowhere, meaning it's still gonna be around for a long time. I don't buy none of that stuff about picking a different default currency. That's just other countries whining, because the US dollar typically, let me show you. Hopefully this chart will show you. This is the US dollar over. Hopefully this thing goes back to 1971 or 70 or something like that. Y'all getting a quick little bonus lesson here. Um, so let me they're kind of like ghosting, putting the image in. Let me switch to a line chart so you can see it. The dollar is designed to fall. Okay, there's nothing wrong with the dollar falling. You want the dollar to fall. I know it's counterintuitive, but you need the dollar to fall. Okay, because when the dollar falls, it makes the price of oil, steel, gold, especially all those materials that go into building a house. It's a whole lot of metals. You got copper for the electrical, conduit. You got all types of metal and steel for your appliances. You got steel making stick frame homes. Your furniture is wood frame for the most part. It's a whole lot of stuff, and all of that stuff that goes into a house is dollar sensitive. It's on the other side of the seesaw of the dollar. So when the dollar is high, those raw materials are cheap, and that's really when you want to buy the house. Okay. And when the dollar is high, the only thing that really trades with the dollar that's really of significance is the interest rate. Okay. So when the interest rate falls, the dollar, they kind of move pretty much together. Not exact, but generally together. So when the dollar declines, the interest rate falls, money gets cheap, you get a credit card, you run up the credit card, you buy all the stuff at the malls, what used to be malls, you go, corporations decide to expand to capture greater market share. They do that with a loan, they run up their credit, they get a new cubicle for you, and they put a computer and there are all these electronic devices around it, and it just trickles through the entire economy, and you also run up your credit card, so the banks are involved in this. So it's just like one big web. And I'm saying that none of that, all of that is way too intricate for prices to be whipped around because somebody made a comment on TV, but they teach us this stupid stuff. They let us go through 12 years of high school. You could teach this to the junior high school student. They allow us in America to graduate with this basic level of ignorance so that we can live as in our illusion of freedom. We're still slaves. This is slavery 2.0. It's economic bondage. All right. They intentionally don't tell us this because they need to create an underclass. They need class stratification. They need to give you a reason to go to work, and they need to pay you just enough so that when you get your check on Friday, you coming back on Monday. All right. Anyway, this is the dollar. So the dollar's been trending down since it's 1970s, like that. But if you look at a chart of gold, let's see, XAUUSD. This might not. I don't think it goes back that far, but does it? Okay, 1971. There's that seesaw. So this is gold. And this is dollar. This is the U.S. dollar versus the Swiss franc. There are many ways I can bring this up, but this is the pair I like. All of them pretty much show you it's very similar chart. And so the dollar has been in the toilet since 2011. So when people say, "Oh, the dollar's going down," that's how I know they're not looking at charts. That's how I know they're not a trader, because the dollar hit its low more than a decade ago. So the dollar has been going up and sideways. It's not been going down, okay? So the trend is still up, and it's not finished yet. I think we're going to hit this level here, this area, not exact price. We don't deal with exact prices in technical analysis. We're just dealing with an area. And I could get into some Elliott wave theory, wave counts, and all that, but that's for the Patreon. But the main thing is this uptrend has more to go, but you see we're overbought on a significant time frame. This is a monthly. So yeah, this thing is due for a little pullback soon. So we may get one more push. We may revisit these areas up here, and then we should get a pullback, not a reversal. Not a reversal. Reversal means come back, continue the long decline. No, we're talking just a pullback, a slight give back, a buy on the dip. that kind of opportunity. And I believe we're going to end up in this area. And so this thrust up here is what's going to kill real estate. It's going to destroy it. It's going to that gold chart we were looking at, it's going to destroy that. Okay. This push up here with the dollar and the Fed telling you that they're going to have X number of rate hikes. I mean, when they tell you we're going to have 5, 6, 7, interest rate hikes. That's telling you right there that they're looking at long range charts. They're looking at all of this stuff. And so corporations know that the debt that they're carrying on their books is going to get increasingly difficult to carry. They're going to have to unwind that expansion, meaning lay people off. They're going to close down divisions. They're going to thin out their product line. You're not going to have 7 choices of the same damn thing. They're going to give you 3 choices. They're going to cut everything because they can't afford to carry the debt, and they can't continue to grow their company on debt. So we're transitioning from cash is trash back to cash is king. You haven't heard that in a long time, but it's coming back. Cash is king. And unfortunately, Bitcoin and crypto is caught up in the middle of that. I'm not against Bitcoin, crypto. I'm a trader. I'm for the trend, whatever it is. I'll trade whatever it is. I'm for people understanding that relationship between the US dollar, other currencies, major commodities, and something like crypto and Bitcoin. That's what I'm for. I'm for people, and technical analysis it's not entirely objective, but it is way more objective than fundamental analysis. And you would have to be in a position where you know both to really have a valid opinion to argue against what I'm saying. I don't even debate people when I ask them, "Do you know technical analysis?" If they say no, it's over. You can't argue that your ignorance is equal. Learn both, and then let's have a discussion. I don't have these debates with people that know both. I don't have any disagreements with people that know both, that know fundamental analysis, which is earnings report, growth rates, debt to income, price to book ratio, all those types of metrics that tells you that this company is a real business with a real product and real profit, okay, and growth potential. So that's what the fundamental folks look at. You can do that. My view is those things are optional. That's optional information. You can pick. Fundamental analysis is excellent if you're trying to pick a company from the herd of companies, and you're saying, and you want to know which company is the safest for my money, which one has a real product, real business prospects, making real profit. It's not hopium. It's a real business under there. All right. That said, most of the market these days is ETF based. ETFs rule the market. Most people, it used to be mutual funds, but when we came out with ETFs, most of the money is in ETFs. And the main functional difference between the two, aside from fee level, forget that. The main difference is a mutual fund. You can only trade that at the end of the day. I don't want to say trade. You can enter and exit a mutual fund at the 4 p.m. price. I'm Eastern, so at the market close. That's the price you get. You can't do anything intraday. Whereas ETF, you can trade that like a stock. And the ETF is a basket of companies, just like a mutual fund is a basket of companies. Just that ETFs are more flexible. You can trade them intraday. They haven't always been around. So from the moment they came out, they became pretty instantly more popular than mutual funds. And so most people buy stocks in the form of an ETF. That's first off. And then secondarily, I would say a mutual fund, because your job, your retirement account is more than likely a mutual fund. On your job, it's more than likely a mutual fund. And so with that said, most stock purchases are in the form of buying these baskets of stocks. And when you're looking at a basket of stocks, it's really more important, how does that industry look from the macroeconomic perspective, from the dollar and the interest rate and the major index, the technicals of the dollar, the interest rate, um, the major index, the industry itself. That's what matters more when you're in buying an ETF or a mutual fund. But if you just want one stock like Tesla, you just got a thing for that. The fundamental analysis can help you um, focus on the company that makes you sleep better at night. I like to say, for the people who really want to do fundamental, I like to say the fundamental analysis can point you to what to buy. Technical analysis points you to when to buy it and when to sell it. Okay. So that's how I do that. All right, let me see. Who else I got? I'm scrolling up. I see Ike. What's your stomach? Ike says so 90% near the top. Okay, my man. Excellent. So Ike, are you into TA technical analysis on any level at all? I'm really going around here, man, trying to get I'm trying to save my brothers, man, from losing a fortune in the crypto. I'm not anti-crypto. I'm anti-hodling. I'm anti not learning. Okay, that's what I'm against. All right. Bound by the new period, subsequently rise and fall alongside one another as a result of. Okay, Jeff, I hear you, but remember, when that term cryptocurrency is the most important word, and that is currency, not crypto. See, don't get caught up in that. It's a currency, and think of it as in the family of other currencies, not cryptocurrencies, all currencies. Think of it that way. You know, think of it as digital fiat. All right, but it's telling you in the symbol BTC/USD. It's still tied to the old world, the old fiat structure. It's not crypto is not on its own island. It's very much tied to the pre-existing macroeconomic environment. It's not its own thing. You know, it's not like unaffected, all right, by the rest of the stuff. That's what I'm trying to say. Dewan Trade says, let's be honest here, everything has fell against Bitcoin, altcoins, currency, stocks, gold. Everything has fell against Bitcoin. So are you saying that's not true? Look at the oil chart. No. 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 I mean, every dog has his day. I'm not against Bitcoin. But you can't look at that disaster, destruction of Bitcoin, and make that argument at this day, on this day, at this hour, at this time. I mean, if you had made it, let me see. To say that everything has fallen against Bitcoin, well, first of all, everything didn't fall. And that's another benefit of being with folks in my Patreon. We have these talks all through the week. I guided my group, and it's documented on with those to the Patreon folks. During the week and every weekend, we do an assessment of the entire, uh, let's say, stock market from an industry perspective. So I stocks exist in industries, first of all. So you pick the industry. Don't pick the stock, pick the industry. Okay, pick the industry, then pick the stock if you want to go to that level. Because the stock is going to is a slave pretty much to its industry. There's certain macroeconomic environment, factors that favor an industry. So when it's good for that industry, that's when you want to be in that stock. But when it's bad for the industry, you want to get out. It doesn't matter what it is, whether it's Apple, Tesla, that nothing is too big to fail in the stock price world. there were things that rose for like Walmart took a serious beating recently. But there were I'm trying to remember some of the things that we were looking at. There were obviously there were a ton of bear market funds that we talked about every week. This was, let me go to a weekly. This was pretty recent. So this high was April 18th. Bitcoin started falling long before that. So up until just about a month ago, there were many things in the consumer staple space that was working. Okay, and I was talking about that on the Patreon. I was right on it. And if you go back, anybody go back to my channel as far back as September of last year, I used the Elliott Wave theory and technical analysis, and I said that we're likely to have a strong market through the end of the year. One, because the price using price projection tools and stuff, it projected that we would reach that high in late December. And typically when that happens, they push the price. They hold the price up until you get into the new year, because nobody wants to pay taxes in the coming April. So having this market cliff dive on January the 4th pushed that tax obligation to April of 2023. All right. And you can go back from September, even clearly by Thanksgiving, I was saying it. So you can kind of see that. And so I started looking for opportunities to rotate money, because it's this concept of sector. I mean, Duan knows it. Duan's a trader. He's a good TA trader too. So we he's very knowledgeable about cryptocurrency. I mean, he's on it. So everybody, please sign up to his page if you want to understand things like staking and like some more like behind the scenes stuff that's going on with Bitcoin and crypto in general. He'll keep you current on the news, and he'll get you game tight on a lot of fundamental factors and some structural things with blockchain and crypto and all of that. He will, but and he's a technical trader too, so he's rare. He's rare. He can talk both. All right. But like I said, I look at the charts every weekend, and we look at stuff. And like I said, his oil. Let me see. USO, US Oil Fund. Okay, so Bitcoin ain't beating that, you know, since 2020. Now, but like I said, every dog has its day. Cumulatively, if I add what has Bitcoin outperformed the market since inception, that's a good question. That would be a good video. I don't know the answer to that, but I'll say this: there was a time when people was touting that nothing has outperformed Bitcoin, and I looked it up, and Apple had outperformed Bitcoin, but people was talking that crap. So it's like it's way overstated, but still, it's overstated to the extent to say that nothing's close to Bitcoin. Bitcoin is one of the stuff. It ain't that many things. Now, I'm not gonna act like I can find 10 things that outperform Bitcoin. We talking single digit things. It's and Bitcoin has been since inception one of the best performing things. Let's just not get into best and number one. Let's not take it there. But it depends on when you measure it. Because there's some other things running close to it. But yeah, so this oil thing is vicious, and it's ready. Let me see, what is it? Did it go higher? Yes, it did. It went higher, but it's way overbought. This thing is ready for some correction too. We'll see if it can beat this, top this. I doubt it. So it's challenge. So these folks here that lost their money, they basically got it all back. And if they're smart, they'll get the hell out and get out, because this is risky. Let me see. Everything is fell against Bitcoin. Okay, sheep here. Currencies falling is bad. It devalues savings. No, the dollar falling does not. Well, yes. If you sit in your money in the bank, yes, the dollar falling is going to devalue your bank account savings. But everybody is told that you're supposed to invest your money. So the people that buy appreciating assets, and chief among them is a house. They make out like fat cats. You're punished in America for letting your money just sit in a bank, uh, except in times like this when the market is falling. But that's rare. Typically, the market, goes up. With the exception, it might be a 2 year period every 10 or 15 years where the market goes through a severe correction, and we're in one of those dangerous areas. Um, but generally, yeah, you are punished for just letting your money sit in the bank. You're supposed to buy gold, stocks, houses. Okay, dollar fall asset. Correct, Ike. Dollar fall asset prices rise. Uh, okay. This is okay. Asset asset prices can rise with legit demand. Doesn't have to be devalued the currency. Asset prices. That's a tricky one. It's like chicken or the egg. They're in a relationship with each other. The price of money, it's hard to divorce that from the demand for a product or service, because that the price of money to grow the business is that's how you capitalize off the opportunity. It takes some money. So we can argue that from both sides. But I think it's the interest rate first. The dollar and the interest rate trend environment. That's the most important. You can't grow against it. You can't buck that trend. And generally, businesses don't even try. They don't even try. That's why they start firing people early. And you're going to see more of it as the dollar marches toward that 2008 high. The layoffs are coming because the corporations cannot service that debt with these rate and interest rate increases, and the Federal Reserve saying they're going to be many more. So that was the shot to corporations, telling them, get ready. That was it. So no, forget the demand. All right, you can choke that you're not going to be able to raise the price of your goods or service to satisfy the debt servicing, because your customers are also in this same rising interest rate environment, and they're servicing their debt too. So you're limited to how much you can raise the price, just because it's demand. All right, so I guess we'll agree to disagree, but y'all still go to the One Trades page. Good information. Yeah, I mean, Sir Anthony. Yeah, yeah. We just, Dewan's, he got his opinion. I got my opinion. I say a lot of stuff that's very, that's like raw people raw. I say it. It's the Aries in me. I say it because I, I want them to come forward to prove me wrong. I like a spirited debate. So in order to get their attention, I have to, do the shock value. You know. So yeah, and Sir Anthony, that's what makes a market. People with different opinions. That's what makes a market. You're buying a stock, somebody's selling it. It's a spinner all day. Economy have to be understood like a symphony music type of thing. All right. So Sarah's music. Okay. Here comes retrace. Constructive consultant. Um, Oh, thank you, brother. I used to like be concerned about the day I would be called an elder. Despite my youthful sounding voice, I'm 5'8". I'm 58 years old. Uh, After all the stuff, including this pandemic, I just feel blessed. I'm glad to be this age. I won't be complaining. You know, you know, we don't have to get old. We can just die. you know, you know, if aging is the only consequence of surviving, I'll take it. You know, time to take a haircut. Fed said to him. Yep, you're right. Right. Yeah. The Fed said we're gonna have, a good number of interest rate hikes. Every corporation knows I gotta get this debt off my books. This might be a good time. See, we don't even have out. I mean, anybody been to an outlet store? Or do they still exist? 'Cause this would be the time. Cause they gonna thin stuff out. And what's that concept? Just in time, they're gonna start producing stuff just to the amount that they need. They're not gonna have stuff in the back. They're gonna what's that thing that they used to give us? Rain checks. You go to the store, try to buy something, they don't have them. Can I take a rain check? All of that stuff is gonna come back in fashion. They're gonna have stores with nothing in it. And then you're gonna go, they're gonna give you a rain check, then they're gonna order it because they can't afford to have inventory sitting in the back. you know. I'll subscribe to the channel based on. Yes, sir, Anthony. Yes, definitely check out. Dewan used to do more charts, but people don't support the charts. I've been doing charts on YouTube since probably 2017. I don't even have 1,000 subscribers. I got it. It pissed me off so bad. It depresses me. I hide the number from myself. I hide my subscriber number from myself. You know. So it's just tough. It's tough to. This is a tough sell. You know. But yeah, Dewan has good stuff, and y'all gonna have to support him. And if y'all want him to do some trades, I mean some crypto charts, y'all gonna have to support him because you gonna have to put in your request when you go over there, and you're gonna have to support him. But the money is not, the YouTube money is not in talking about technical analysis. In all those years, I mean, y'all go through my page, look at what's wrong with YouTube. Why did they stop putting dates of videos, air dates of videos? That pisses me off. So you sitting there watching the video that you already watched before. You watching the video that's 6 months old. No, I needed those dates to be on my stuff. I needed to be on all my videos so that people can line up the date of the video with the stock chart. That's why I'm doing my channel. I'm documenting my errors and my successes with technical analysis so people can see on balance how it works out. So when I go picking fights with people that say crap like, well, nobody knew, I can go bullshit. Bullshit. Come on. This is nobody knew. And I can point to other technical traders that knew. Quote, I don't want to say new, but we're making this same forecast. And so until you start counting and taking notes of who said what when, you really don't know. You really got to start paying attention, taking names of who's telling you to buy and hold forever. And then look at the technical people and see who's right, who's wrong, and how off are they? How off were they? So, but yeah, I think that's it. I'm getting on about here. I think I'm caught up with the. This is, can you do TA on NIO? Okay, let me see. What is NIO? Is that a COVID thing? Is that a pharmaceutical thing? Let me see. This is how we do that. First, I want to know what it is. I just generally want to know. Oh, wait a minute. Slow computer. So I was doing my sector analysis this weekend. Okay, this is what if we get into the weeds on on my Patreon. We don't. It ain't about feelings. Okay, it's about where the money is going. Period. Okay, ADR. That means it's a foreign company. It's a company that trades on another foreign stock exchange that they have a symbol on our U.S. exchange to so that Americans can invest in it. That's the okay. It's motor vehicles and passenger car bodies, automobile, foreign. Now, ordinarily, I would say this just without even looking at a chart in this strong dollar environment. A lot of those things have gotten hurt because of the strong dollar, but the dollar's got to have a pullback soon. And so I just before even looking at the chart, just to just that macro, that seesaw relationship. When that dollar correction comes, and I don't mean reversal, I mean just a pause, a pullback. These automobile companies gonna fly. They're gonna go up big. In fact, this weekend we were charting Ford and General Motors. Sunday, 2 days ago, we were charting Ford and General Motors because the dollar looks kind of toppy. Uh, it's it now. With that said, Bitcoin falls fast when it falls, so Bitcoin could get down to those other levels. I'm gonna show you those other levels I'm talking about. Pretty fast. Bitcoin can get where it needs to go in a week, and so Bitcoin could hit that level right at the same time that that the dollar reaches the top. Okay, it's a pioneer. NIO is a pioneer in China's EV market. Okay, positions itself to provide EVs at competitive pricing. We say electric vehicles. NIO does not really manufacture its own cars. It contracts state-owned JAC Motors. Wait a minute. I think Matty Ghost was trading this. Matty Ghost is in the in the Patreon group. He's killing the game, man. Talk about he's probably the most patient chartist trader in the whole group. If the chart don't look right to him, he don't mess with it, and he gets out when he sees the trouble. So his discipline is some of the best I ever seen. All right, importantly, it does not really manufacture. It contracts state-owned JAC Motors, headquartered in Eastern China's who I don't know how to pronounce that, to make vehicles in turn J. So okay, so what they must own patents or something. Charges fee for every car. In fact, does not have a dealership network and instead sells its vehicles through apps and a network. Okay. A swanky houses located in some of the most expensive areas of China's largest cities. Gotcha. Now the benefit is the higher the dollar goes, the cheaper those metals get. The 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 richer the bottom line is for people that make products that use steel, and aluminum. Yeah. But provided people can get the loans, so it's kind of tricky. It's kind of tricky. So yeah. So when the dollar was rising, it destroyed this thing. Um, but this pattern could be done. I'm not. I would like to see this low get retested because it went lower than here, lower than here. It's not quite there. I would like to see it. This one is absolutely worthy of being on a watch list. I needed to break that line. I kind of did, and I want to see it kind of come back down to test this low. Let me look at it some more. Okay. I think that we could test this area in this move out. This looks like it's got. Um, I'm trying not to get too deep in the Elliott wave theory here because that's Patreon stuff. But this structure is not finished. It's got a little run to go. And so the size of this next move. So they okay. In the Elliott wave theory, there's a certain movement the price makes. Okay, back up. There's a difference between what we call a correction and a reversal. A reversal is this was going down. A reversal says we're going up, likely to make new highs. That's a reversal. Reversal of the whole trend. The negation of all this loss. That's what a reversal is. A corrective pattern, a correction is a pullback, a counter trend move that's part of a larger uh, trend the other way. So so a correction would be a pullback, likely up to this area, somewhere in there, and then resuming the downward trend. So depending on the size of this trend up that is really kind of in right now, I won't know until later if this is a corrective pattern or reversal pattern. It's too early to know. Again, the main difference is if it's a reversal pattern, at some point that move will get overbought and we'll have a pullback and then it'll continue going higher. Whereas the corrective pattern will start falling, and it'll make a whole new low and continue going lower. It's too soon to sell, but no one should be shorting this right now. That's for sure. Okay. And which is also a clue that dollar trend is getting exhausted, which is good for Bitcoin. Okay. So Bitcoin could take a dump. It needs to take a dump, it needs to take another dump. So this last move down for Bitcoin, I'm going to bring up that chart to show that area for Bitcoin is likely to be vicious. But that could be the end of the decline. That last move, I meant to go to the other chart I had. I don't know what this is with all these markets and stuff. So yeah, this thing around 12,000, which was right in here, right in this area. These old highs here, where the price. Remember the time, as Michael Jackson said. There was a time when price had difficulty breaking out above that area. And then it broke through. I'm kind of trying not to get too much in Elliott wave. There are 5 waves in Elliott wave structure, 5 waves up. There's a pullback after wave 1, there's a pullback after wave 3, then there's a massive correction after wave 5. I believe this is the massive correction after the 5-wave structure. And it could end here. That's the bad news. Here's the great news. Y'all gonna love this. All right. Let's see. The 5 waves, it's like tic-tac-toe. You play 4 games, the 5th game, you put a cross through it, and that becomes a set. Okay. So this 5-wave structure becomes a set. And so this would all be considered wave 1. And this would be wave 2. The good news is the big money wave in Elliott wave structure is wave 3. It is typically the most powerful, strongest, most profitable wave. In other words, if I'm right and this is wave 2 and we stop around in here, or then that means you ain't seen nothing yet. Remember, I'm not a Bitcoin fanatic. But this thing could hit up to like 170,000 or something before wave 3 is over. Okay, so it's staggering what to go from this like 11 or $12,000 range to $170,000 area, and that's just wave 3. Then you get a vicious wave 4 correction, and then you get wave 5 that takes it even higher. Now, there are that's a conservative wave 3. There are certain structures that go even longer. So, but just as the conservative projection, that's the scale of what we would be looking at for this next move. So, the people that don't throw in the that don't walk away. There's going to be a lot of people when Bitcoin falls down this area. It's going to be a lot of people that's going to walk away from crypto, and they're going to say it's rigged and all of that. And I'm going to be somewhere saying if they would just learn a robust methodology or principle or theory like Elliott wave theory, learn it, but don't learn it in isolation. Join a tribe, self-promotion, join my tribe. I definitely right off the bat start pointing you to other people, not just me. So you have some protection, some insurance against, my own ism. Okay. I'm gonna point you to some other people. They're not gonna always agree with me, and you're gonna have to see what happens based on what they say, what I say, and over time, you'll see where you fall on the continuum, because you're gonna learn these principles, and you're gonna have to apply these principles. It's just like, going, like I may have said this earlier, it's like going to the doctor. You can't get two doctors agree as to if you need. I'm not gonna say you can't get two doctors. Often doctors won't agree as to if you need surgery. Okay, they both are doctors. They both are competent. They both had the same training, yet they come away with different opinions. Okay, so that's what technical analysis is. But it's even worse because people come from different camps. So you have to find out what their methodology is. But you wouldn't even know how to evaluate that if you didn't know any of the methodology. So it's very confusing for non-technical traders to understand what we're talking about. And it looks like everything is subjective and arbitrary until you begin to learn. And then you'll find a core group of people who are going to agree like 90% of the time. And you're going to go, and they're going to be right like 80-90% of the time. And you're going to go, okay. And then your evaluation of price trend, your analysis is going to conform or be influenced by that group that has a high percentage of being right. And it just takes some time. That's the difficult part about this learning is just the discipline to stay with it, because price trends take a long time, and you have to sit through a price that comes out of the dirt, that reaches these levels that Elliott wave theory projects, and then has these corrections at these price areas and the correction happened at the degree that Elliott wave theory suggests. And you have to see that happen and be right enough times for you to have confidence in it. And so, we can't make the price move faster. If a trend takes 2, 3, 4, 5 years, you're going to be learning through that whole time. And then the first few times you go through a correction and it feels like hell, and you experience something losing like 80% of its value. And, if you're in a tribe where they're talking Elliott wave theory along the way, because I put up videos midweek and on the weekends. And like I said, I do one-on-one training and group training. So people see me make mistakes. They see me get it right. They see other quote unquote experts make mistakes and get it right. But the mistakes are minor because the price will make a certain move that will invalidate uh, our opinion. Either it will either support it, our opinion, or refute it. And so you have to be your own worst critic, you know. And it's a good mental exercise because it's it's actually more objective than a non trader would think. It's actually much more. It doesn't take long before both people on different sides come to agreement, because the price is going to do something to invalidate, one point of view or another. You know, Andy, if you haven't had a session with me, you gotta have a session. You gotta watch the videos. You can send me charts. That's what people do is they send me. They use the theory, and they send me charts to my Patreon inbox, and I will send you. You take snapshots of the chart. Like you come here, and you take a snapshot. You know, so you come here, and you just you mark it up with your wave count, and you take the link from the chart is going to come up, and you paste it. Yeah, you paste this link into my Patreon inbox. I look at it. I'll send a chart back. If there's a problem with yours, if it's too complex, I'll make a video because it's might be too much to write. I'll make a video. Um, and so that's kind of where we are. So that's the story with Bitcoin. The target area is down here around 11.5. Okay, and we'll see what it is. Let me check on this. Uh, Let me see. Yes, and I said we would come back up. We'll see if this holds. I don't know. This thing could even go up. It's gonna be tricky. I'm trying to see if this the low or is this the low. 31,250. 31,220. This is the low. Okay. I'm looking at there's like a zigzag pattern that I'm looking for, and I thought it would have happened here. It looks like it's happening now. So because this leg was bigger, like this thing is likely to come down a little more. We could get another push. We could get another push. But it's not. It doesn't look like it's going to threaten this. This thing is still dog meat. It dog meat. But we are overboard again. This is a 5 minute. We're overboard. I wouldn't trust this thing. But I am shorting this in the. I'm up here, up in this area. I was looking at this, so I shorted it. I'm in uh, the futures market. Okay, so in the futures market, you can short. I'm shorting Bitcoin, um, shorting Bitcoin in the futures market. All right. Okay, I think that's it. I think that's it. Unless there are any other questions. Anything else? Anyone? Anyone? All right. Thank y'all for riding with me. I'm glad to have this 10 or 11. I really am. Y'all see, I just go. I get long winded when I start talking about these charts and stuff. But Andy, yeah, every Saturday, if you can't like send the charts and stuff during the week, definitely watch the videos from the weekend. It's labeled. I don't want to say how it's labeled, but it's a training video that I post every Sunday. So there's one from this past Sunday, and that thing is about 3 hours long. So every one of them every Sunday, it's about 3 hours long. Iori was the star of this one. Because a lot of, we didn't get the some people that normally show up didn't show up because of the holiday weekend. So I was there. Iori was there, and on Crypto with Lionel. If y'all wonder where he's been, he's killing the game. He's over there. He's in the group too. And Lionel, I don't consider him a student anymore. I don't have a graduation ceremony, but his chart game is tight. He was a crypto, he's still a crypto trader, but he was a crypto hodler. Okay. And that big decline from the $20,000 level, when I had been telling people back at that point in the wage structure that I wouldn't buy Bitcoin with your money. And then he became a believer. Curious enough to join my Patreon at that point. And since that time, what was that, 2018 or something like that? He has become a very good uh, technical trader. So I consider him more a peer now. So we'll like duel. we'll have dueling opinions, and then and all of our debates ends with we'll see, because the price is going to make a move to invalidate one of our views. And so when we're debating, we'll be debating stuff like, here or here. I want a 5 minute chart. We don't be having like the dispute be about small areas. Is it going to go higher and keep going much, much, much higher, or is it going to fall through the floor right here? And so, we'll have those type of debates. Like, is it going to go above this candle and keep going much, much higher, or is it going to go through here and the bottom will fall out? And again, we're on a 5 minute chart. We'll be having debates at this level. And so, when fundamental traders say that we're wrong, this is the degree that we're talking about, that we're wrong, because they're not around to hear us update it. And when we update it, it'll just be a minor change. Okay, so now this is the level. It's not like wholesale, the price just keeps going, going for days and weeks and months, and we're still saying it's gonna fall, it's gonna fall. No, it's not like that. It's not like that. We're not off like that. Because at some point we'll say our count was wrong. We'll go count it again, and so we'll figure out that our count was wrong, and there'll be another projection. So even the price movement will invalidate your error, and so you get it. That will bring you into symmetry, okay, with the price movement. All right. So when you're wrong in TA, you're not often wrong for long. You're not wrong for long, but you're going to make mistakes, because this is not exact, and you're not perfect. None of us are perfect. But if you're doing it right, you will join the trend that is, and then you'll go back from the all over again, look for those signs of trend exhaustion, count the current wave structure that's in progress, and look for those signs of reversals. But meanwhile, you're making money, and we always use stop losses. We move the stop losses up as the price go up, so we never, if we're disciplined, we don't lose our money. We move the stop loss above the point where we got in. So we might lose some of the profit in that trade, but we won't go, if you're doing it right, you're not going below where you entered the trade. You're not losing your principal. You might sacrifice some of the profit, but if you're doing it right, you're not routinely, losing, going below your principal. So worst case scenario, you break even, if you're doing it right. And it takes discipline, practice to do it right. All right. Okay. That's it. Peace, y'all. I'm gonna study this some more. I'm gonna look at Ethereum and all of that. And if I have something worthwhile to say about it, I'll be back. As y'all see on my channel, I know they working me hard on Patreon, and I got a trade. So in the middle of all this teaching and stuff, I'm still a trader. And so YouTube is kind of like lower on the list of priorities. But if you're on Patreon, you hear from me all the time, all the time. They got a Patreon got an app for the phone. So when I put up charts and videos, you get that ding. So they hear from me. But peace, y'all. I'm out.